He drove to Arizona with $500, no plan and no connections. Lost his job at the first restaurant he worked at in the city, and not knowing what would come next, he stumbled right into insurance and became the #1 commercial property agent in the country at Farmers. Then he walked away and bet it all on himself. Today, Dan Garzella is the founder and CEO of the Garzella Group, and he's built an entire portfolio of companies on 3 words: never give up. With his towering presence over the room, Dan's focus and commitment on doing the right thing, building relationships, and taking risks, he can motivate anyone within their field to push to the next level. This is a conversation that you will most certainly listen to twice. Welcome to Check In with Bryan. I'm your host, Bryan Fish, and let's sit down and have a conversation with Mr. Dan Garzella. This episode of Check In with Bryan is brought to you by Reliance Hospitality. Hospitality consulting, project management, and business process outsourcing, built exclusively for the owner's side of the table. PIPs, renovations, budgets, brand compliance, we manage it all so you don't have to. Learn more at reliancehospitality.com. Welcome back, everyone, to this week's episode of Check In with Bryan. I'm your host, Bryan Fish, and one major topic right now across our industry is insurance. It's the big I word that nobody really wants to talk about because it's a big piece of your P&L, and it's been something that's been creeping up and up and up over the last couple of years. And there's a reason for that. We're going to learn about that reason today and also talk about some ways that we can try to avoid those costs continuing to rise, and hear a little bit about the fact that there is some relief out there. Unfortunately, though, the hotel market is still what they consider distress, which does cause some issues with trying to get those rates down. But there is a road ahead, and there's options out there, and there's some best practices that we can all follow to help lower our costs at the end of the day. So I've got a great guest that we're sitting down with today, Dan Garzella. He's the founder and CEO of the Garzella Group based here in Scottsdale, Arizona. And Dan's got 20 plus years of experience in the insurance market. He literally has built his career from literally nothing to a major firm with over, I think, $30 billion worth of assets in one of the companies currently. So Dan's a great guy. He's going to provide a lot of great information, and I'm looking forward to what he has to share with us. And I know that this will be beneficial to all of you out there. So we'll be right back after this with Dan Garzella. Welcome back, everyone, to this week's episode of the Check In with Bryan. I'm your host, Bryan Fish, and we are joined today by Dan Garzella, founder and CEO of the Garzella Group, based here in Scottsdale, Arizona, or Phoenix, the Phoenix metro area. But Dan, welcome. This is your first time on the podcast.
Yeah, thanks for having me.
You're not very far from here. You're just down the street from the studio, which is great.
I could probably walk here if I was very motivated to do so.
And it was much cooler outside. Yeah. No, unfortunately, we can't walk here. It's quite a drive. So you had a much shorter commute than we did. But no, we're glad that you were here. We're glad that you got to see Next Space.
Yeah, space is awesome.
You know, I guess the easy thing, if somebody asked me who is Dan Garzella, I'd be like, well, he's the insurance guy. Mm-hmm. But what is the Garzella Group?
The Garzella Group. Well, who is Dan Garzella? You know, I'm certainly a motivated entrepreneur that lives to create opportunities for others. And in creating those opportunities, I, of course, founded and launched the Garzella Group, which has now grown into a group of insurance-related companies. 2 major ones probably relevant to this conversation. One, of course, is Avalon Risk Management. Avalon is our own proprietary commercial property insurance program. And we've got about $35 billion in total insured value across the United States.
Wow.
And then the second company is Arcstone Insurance Advisors. That's our traditional retail insurance brokerage, where we broker insurance through, all the big names that you've heard of: Travelers, AM Trust, Nationwide, Liberty Mutual, etc.
Lloyd's of London.
Lloyd's of London. Well, that's back a few steps. That's more in the program space, but we do a lot in the traditional brokerage space. And then, of course, we've got our own proprietary program, which is, of course, Avalon.
Awesome. So you have your hands in a little bit of everything.
Yeah. They're all related. And, one, I've always had a problem first approach to business. So, I identify a problem, solve the problem, and then look to monetize the problem.
Yeah.
And so that has led to 7 insurance related companies right now.
So was insurance something you were always interested in?
Never.
So how did, I know, obviously I did a little bit of prep for today. It seems to me that across the board, it's kind of like hospitality. People kind of fall into it.
Yeah.
It doesn't seem like people set out to become an insurance broker or own an agency or do anything in the insurance space. So how did that happen?
Yeah, you're exactly right. So I had from Michigan originally. I had
from Indiana. So,
yeah. Perfect. Midwest is great.
We're good people.
That's for sure.
Yeah.
I had a computer science IT background, graduated college, had some friends moved out to Arizona, moved out here with, $500 to my name, and just figured I'd get a job waiting tables while I was looking for something in my field. I did. I went out 2 weeks, was able to get a job at a fine dining restaurant. I was super pumped because I was set in my mind. And then I went to go on my first day of work, and I had spent most of the money I'd saved the weekend before. And I went to go on my first day of work, and I saw the hiring manager with his head down and his shirt untucked. And I walked up to him and was like, "Hey, what's going on?" And he's like, "Well, I hate to do this to you, son, but the owner came in today and shut down the restaurant." So I thought I had a job. I didn't have a job. I spent all my money. So I took the first job I could get, which was renewing Reader's Digest subscriptions, which was terrible.
Are they even still in business?
I feel like they are in some capacity.
Yeah.
I mean, how could Reader's Digest go away?
There must be some digital version of it or something.
Yeah. So, the one thing I learned from that is it's not ask marketing, it's telemarketing. And so I always took that one little nugget with me forward. But other than that, it wasn't the most fun. And then I got a second restaurant job. And basically while I was, starving and figuring life out, everyone in the computer science IT field wanted 3 years experience. They wanted all these certifications. I wasn't super motivated to go work at Best Buy to kind of get there. And so was just, again, starving and figuring life out. A recruiter from Farmers Insurance called me and said, "Hey, it looks like you possess some of the qualities you're looking for. We'd like you to come in for an interview." And I thought to myself, insurance, why the hell would I want to sell that?
Right.
And I remember my insurance guy, my Allstate guy, I wasn't impressed. A lot of people's lens of insurance is through the view, especially when you're young, of your home and auto insurance.
Yeah, which I would say being in the commercial world, I feel like those guys give a bad...
They're not held with the highest level of respect often.
Right. Well, obviously,
I
just said that.
I mean, you got to, kind of work your way,
right.
Work your way up. And so at any rate, I wasn't impressed. I was like, but my father's always been a big mentor of mine. He's like, just go and see what they have to say. So I was like, okay. So I went in, and they're basically like, here's what you can accomplish financially if you work really hard. Insurance is residual based, effectively, residual income. So that all made sense to me. And I just took it and ran with it, and happened to be, the insurance is one part of it, but, building a business happened to be something I was really took to. And I don't know if it came natural, but I certainly worked at it. I had the Farmers Agency for 10 years, kind of capped out that business model. Because if you're with a captive insurance company like a Farmers, State Farm, Allstate, you are usually contractually limited to that one option. And so I got to a point where I wanted to play a bigger game. I was 32 at the time. I'd already capped out that, business model, if you will. And so then I sold it and started the Garzella Group, which originally was just a retail insurance brokerage. And then, as I had said earlier, as I started solving problems to scale that brokerage, it started spinning off other companies.
Yeah. That's how it works. You start to solve, this is how it's happened for me. You start, we have a travel agency, which came out of a need. We have a media company because it came out of a need.
Yeah.
That's how you build the business, right?
Right.
So you went basically from just waiting tables to having a massive portfolio today of business.
Yes. Waiting tables, it's funny because I was, coming out of college, cool guy in college. And then all of a sudden, you go through college and they're like, oh, you get this degree.
Oh yeah.
And, your life is set. Things are going to be great.
Right.
And, I got the degree, and next thing I know is I'm singing happy birthday to people, to try to work in 14 hours waiting tables just to try to, build my insurance business and keep my head above water.
Yeah. No. And I think that's the thing. And I think we came up in a time when it was like, well, if you go to college and you get your degree, like you're set for life, like you're going to make all this money. And the reality is I always feel bad when people would come work for us, or when I was working on property at hotels, and people would go to hospitality school, and they would have gotten loans for $100,000 or more to go get this degree. And it's like, and guess what? You're the newest front desk agent at the Crown Plaza, making $12 an hour.
Yeah.
You're not going to walk in and just make, six figures
right
away. Yeah. No, I love that, because that is where, like, I feel like hospitality and insurance very similar. Like, it doesn't seem like anybody sets out to do it. You just end up in it.
Mm-hmm.
But you've made an amazing career of it, obviously.
Yeah, for sure. Thank you.
I mean, do you genuinely like it though?
I love it.
Okay.
I love it. Absolutely. And it's not even work for me.
Yeah.
And again, it's just about I like to build, I'm not necessarily building houses, but, building companies. And, if you compared it to, an artist will paint a picture, well, my artistic expression is, effectively building companies and creating opportunities. And, it's not, in addition to that, or another driving factor is, of course, the people that I bring in, being able to see and watch them grow out of a, kind of a vehicle that was created by myself. And now I've got a big team of people,
right?
But watching them being able to grow and advance in their career, I get a lot of intrinsic value out of that.
How do you feel like you are as a leader going? I mean, I can only imagine, like, with that, since you didn't set out to own a company like this, but you built it. And obviously you're probably like you started probably, it was just yourself when the Garzella group?
Yeah. 23, just myself. I had my first, I started in, let's just call it 2004 by the time I had my licensing and everything.
Yeah.
And then my first employee was like a year later.
Okay.
And then in the captive world, there's not enough revenue coming in to really grow and build. So I had 9 employees at the time, at the max.
And how many employees do you have today?
Yeah, probably close to 60.
Okay. And how do you feel like you have developed as a leader over that time?
A heck of a lot of trial and error. I'll tell
really?
you that. Yeah, it's a combination of things. I mean, I think that one of the things that's always worked well for me and any, entrepreneur is I just always move forward. So I may not know exactly how to do something, how I'm going to do it, maybe new to me, but guess what? I'm just going to do it. And then I figure out and I learn from it. From a leadership perspective, I remember my first time when I had maybe 5 or 6 employees, and I went to, I think coincidentally it was Best Buy to get something. I get a phone call and everyone's screaming at each other, and there's a big blow up. And I call my mentor at the time, and he's like, "What am I supposed to do?" And he gives me a little bit of guidance. So I mean, it's just been a progressional learning over 22 years. Yeah, that's contributed to that, I think.
Yeah, because it's interesting dealing with managing people is a whole other animal in and of itself, and while you're building a business.
Yeah.
And everyone's looking to you as the North Star to figure out what to do.
Yeah, they sure are. And I think I've got a natural skill set for that. Also, both my parents were teachers. I have always come at things just naturally from a coaching development perspective, which has really helped me.
2 teachers, that must have, patience was taught in your household then.
Yeah, very, very much so.
Yeah.
And so there's a lot of that, foundational, stuff that you wouldn't, I think about now. I would never thought about it before, but in reflecting, I'm like, I watched my mom teach my son, and I'm just like, oh, that was me back. So I was like, man, thanks. Yeah. Thanks for all that effort, time, energy, effort, and work that you put into that. Cause I can see how that's translated to my success in the future.
Right. In the building of the company, is there anything that comes to mind where you said, I made a mistake and I wouldn't do that again?
I believe in people.
Okay.
And so I've had some real high level producers, productive people that, have worked for me. And I always try to give them a path towards leadership or potentially running one of my other companies. And so there was one individual that kind of fit that mold. And I believed in him and put him in a position to, run one of our companies, and he wasn't built for it. And the things that kind of motivate and inspire me that I loved about doing it were things that caused him pain. And so, and I didn't know that. I'm just like, you can do it. I want you to do it. It's the next step. And, and so he did, but ultimately it didn't turn out very well.
Right.
And so it's one of those things where, like, in that situation, yes. And maybe having some more, now I have a little bit more awareness of that now going forward, but it doesn't stop me from staying consistent with the things that have helped me grow to the level which I have, which is, believing in people, training, developing them, and
Right.
putting them in a position to,
Right.
succeed.
Well, because and maybe mistake's not the right word, but at the end of the day, like not everybody knows everything. But in this case, you obviously learn from it. And
Yeah,
it teaches you something ultimately.
Yeah, I make mistakes all the time.
Yeah. And I think people forget when you're the CEO of a company or the owner of a company, the pressure's worse.
Yeah.
Because everybody expects you to have the answers and to do the right thing all the time. When in reality, most of us, we're just doing what we know is the best to do. We don't actually know the real solution, and not in every situation.
Right. Yeah. I mean, you're effectively, making judgment calls on,
right.
Cost benefit analysis and looking at risk, or at least I'm looking at risk.
Yeah.
I'm like, okay, what's the highest chances for success in this situation? And
right.
And then just going with it. And if you make more good decisions than not, then you're usually moving forward.
Right. Yeah. And if you don't learn, and the thing is, you got to learn from them, right? Mm-hmm. So that's the biggest thing, you got to learn from them. The one thing that it does seem very important to you and the group of people you surround yourself with that I've had the pleasure of meeting is it does seem like relationships are very important to you. And you have built a good network of people mm-hmm. around you. How did that come about? Like, was that just a natural skill that you had? Like, how do you collect people? I feel like you're a collector of people.
Yeah.
Like I say that as a collector of people. Like I blows my mind how many people you have a problem, I know somebody.
Yeah.
Or like somebody like has a specific issue with a specific company. And it actually happened to me this week where somebody had an issue with a specific company. I was like, oh, I know the CEO.
Yeah.
It's like, and I forgot I knew him. But I do, like, that's one thing I do respect about you and the folks that I've met through your network has been, everybody seems very relationship focused.
Yeah. I mean, relationships are critically important in business, and having good people and the right people are equally as important, because you're not going to continue to grow without that. And there's a lot that goes into that. One is, again, like I've said a few times, is being able to create opportunities for others. Mm-hmm. I collect these people because they see an opportunity in where it could take them.
Right.
I also look for, what's important to people, and then I help them get it.
Yeah.
And so I look at it from that lens. And then the other one is, I just, overall, I'm just kind to everyone. And, and I don't think I'm any better than anyone else. It's the whole, generals and janitors, type of theme where, if I need to clean, what was I doing the other day? Changing water bottles. Someone's like, you don't need to be doing that. I was like, I'm right here. I can do it.
Right.
Just something simple like that. So I think, a lot of that, and I I'm naturally pretty humble. And so I think combination of all that attracts, the right people, into our company and our organization, or even, related to it in some capacity.
Right. Yeah, no, I think I have a lot of respect for it, just because it's rare to find it all the time. Mm-hmm. And I've been all over the globe, and I've seen some people do a really good job of building relationship with people, and others do a really bad job of it. I mean, I attribute it to our Midwestern upbringing. It's like, that's kind of like,
I certainly think that's part of it. And the other thing I think too is communication is incredibly important. Mm-hmm. So answer every email, every phone call, return calls, return emails. I mean, maintaining a high level of trust is important, and you do that through communication. And so, I'm always very big on trying to make sure that everything I said I was going to do, I absolutely do. And if for whatever reason I can't do it, then I communicate that I can't do it. And so I think that those types of things bring on the right people and be able to, maintain relationships with very high level people.
No, 100%. So let's talk about commercial insurance.
Sure.
So the market is very tough for property owners these days when it comes to insurance. We've all read carriers pulling out of markets, changing what they will cover, what they won't cover. And obviously the biggest thing that's a conversation, which is a huge conversation right now in the hospitality space, but I would imagine, and I know just from speaking with others, that it's an issue across the board with commercial property altogether is skyrocketing premiums that, they are paying 3-4 times what they may have paid, 20 years ago, a long time, but like 10 years ago. What do you feel like is the honest evaluation right now of where the markets really sit? Like, is the insurance, are the premiums really too high, or is it just the nature of the beast in the market today?
Commercial property insurance market, or really all the insurance markets over the last, call it 3-4 years, have, we call it a hard market because terms tighten up and premiums go, through the roof. And the market has got to a place where it's pretty much peaked at that hard market. And again, the hard market costs, just to get a little bit of an education, or driven by a few different factors. One was inflation. We had unprecedented inflation. Of course, when inflation goes up, claim costs go up, litigation costs go up, et cetera. That was compounded by the various departments of insurance not allowing the insurance companies to take rate to offset that. So what would happen is, you have unprecedented inflation, and the insurance companies go to the California Department of Insurance, say, hey, I need to take a 20% rate increase. And they either say no, or you can take 6, right? And they're already 6 months behind because, the bureaucracy is slow. And so by the time it gets approved at whatever level, they already need to ask
Old
for
news.
it again.
Yeah.
So what ended up happening is the insurance companies can't get the rate that they want, but their costs are still going up. So they're like, you know what? We're not writing. And so they pull out of the market. Then what happens is the markets that will write it are more in the excess surplus lines and specialty markets, which are significantly higher cost. And then compounded on top of that, you've got the catastrophe costs to reinsurance. So every insurance company buys insurance. It's called reinsurance. And so when you have these billion-dollar, events, Travelers is paying up to a certain amount, but then it hits all the reinsurance markets. And so the reinsurance markets then put downward pressure on the insurance companies, which again, increase your costs. So that's what's been going on in the last.
So I think a lot of people don't realize is the insurance company, and you can correct me if I'm wrong on this, but if say that you have a $20 million policy, a lot of times the insurance carrier you think you have is only going to carry a certain amount of that liability. They've sold the rest of that liability to another like reinsurer to cover that. So it's like they're not the sole deciding factor.
You're exactly right.
Yeah.
And it has to be that way because, in any single, like California wildfire in 2025, had a single carrier had to take that, there wouldn't be
right
that carrier anymore. They need all these reinsurance carriers, and it's usually not one, you've got a bunch that are taking the burden of that massive loss, but then it all rolls back downhill. So that's just a little bit of background on why insurance costs have gotten to the place that they have today. Now, the market actually is softening. Softening meaning rates are coming down, terms are loosening up. In fact, in Avalon, we're seeing rate reductions of 10 to 30% right now. Now, the challenge in the hospitality world is, hospitality is still largely considered a distressed class of business because you guys have a lot going on.
Right.
So traditional commercial property, you've got your commercial property, your general liability, maybe your umbrella. Well, in the hospitality world, you get to add on, commercial auto for potentially for shuttles and valets, liquor liability, workers' comp,
non-owned auto,
cyber exposure,
salespeople,
non-owned auto, the doors, the units they're turning frequently, daily, versus in a traditional apartment, they're long-term, year-long leases. And there's just a lot going on. And so as a result of that, the hospitality market, whereas the overall commercial property market is seeing decreases, the hospitality market, maybe not so much. And you've got other factors that are playing into it, which continues to drive costs up.
So let's dive into those other factors a little bit. And you're very correct in the case, like, a commercial building that's got office space that they're leasing is very different than a 200 room hotel that's running 80% occupancy,
Mhm.
that people are checking in and out, and there's like risk for people that there's slip and fall opportunities. There's all these things that could potentially happen. What is it? And I'm assuming it's the same on like for any commercial property, but what do you feel like people don't do to help themselves in terms of keeping their rating with the insurance company, their loss runs in a place where they can actually get a good rate? I mean, I could give you some examples.
Yeah, well,
but,
so there's a few things. The biggest one is that the best insurance claim is the insurance claim that doesn't happen, for the insurance company and for the owner.
Right.
And so there's a lot of upfront, proactive, preventative measures that an ownership group can take as it relates to the management of their properties, security protocols, et cetera, building maintenance, to make sure that everything is dialed in per se to minimize the chance for loss.
Right.
So I think that like on the front end, there's a lot that an ownership group can do to help manage and mitigate that as much as possible. Now, let's say you're doing all that, then there's some other factors to consider. One is, how is your current insurance program structured, and who is it structured with? So like, for example, some of the big names, again, I'll use Travelers. A lot of them want they want a small window, a lot of newer stuff. Whereas, the more it falls outside of that, now you're looking at other different program structures and whatnot. And so, how is that structured? Do you have it structured in a master program? And if it's a master program, is it master to your ownership group, or are there other ownership groups that are kind of piggybacking off of that structure? And what does the impact of their business practices that you don't have any control over have on your insurance costs in your portfolio? So there's a lot of things. I mean, there's everything that you have control of. There's the things that maybe you don't have control of. And then there's things that you just don't know that you don't know.
Which I would assume would be more of like acts of God and things that just...
Yeah, any of the catastrophe stuff.
Catastrophe stuff's going to happen, and you can't avoid it.
Yeah, like if there's a massive hurricane that happens to come through, which hopefully it doesn't, and that's going to put, again, pressure on reinsurance costs. But that's, more specific to a commercial property exposure, not as specific to the liability, workers' comp, and those other lines of business.
Yeah. No, I think what I see consistently is there's just not enough focus put on the actual risk management aspect at the hotel level.
Right.
Because everyone says, oh, well, like the thing I always love is everyone says, oh, we have a safety plan. And it's like in a red binder, like in the office somewhere. And then something will happen and you'll ask, well, do you have this document and this and that? And they're like, well, no, but we have a safety plan. And then they will send it to you and you'll look at it and you're like, well, when you read it, did you notice you're supposed to do all the stuff in the appendix? Like, it was great that you had it written, but you actually have to do the things in the plan. And a lot of people, and I think they just don't think. And a lot of times, especially in the franchise community, the hotel owners or the operators are assuming the franchisor is looking out for them.
Right.
But the only thing they're looking out for is that they get a certificate of insurance that says that they have the minimum requirements for their franchise agreement.
Right.
So then something does happen, or they're just the rates keep going up because they call every time, which is another common thing, which I would love your perspective on is, you said like the best insurance claim is no claim at all for both sides.
Right.
There's a lot of people, and I am curious, I'm assuming this happens in other commercial verticals as well. When something happens, the immediate thing is call the insurance company. Yeah. Is there I've had a conversation about like ADA compliance with another guest this season. And, we talked about the fact that sometimes it's better just to pay out than settle for like $5,000 and let it go away, as opposed to litigating it just because the cost benefit's not there. Like, do we call the insurance company every time? Does that affect us too if we're just calling every time? Or you really need a new roof, but you just you're trying to get a roof through the insurance carrier?
We refer to that as reviewing your insurance as a maintenance plan, and not necessarily for for the things, not necessarily for the things that ruin your day, but you want it for the things that would ruin your life perspective, like at that level. And so if an ownership group is looking at their insurance again as a maintenance plan, the insurance companies look at two things. They look at frequency, and then they look at severity.
Okay.
So if you continue to have the frequency, they don't like it. If you have the severity, they don't necessarily like that either, but usually the severity hopefully is isolated to maybe a single
incident,
one-off event. And so where the challenges can come in is the ownership group's view of their insurance. And the insurance companies, they're a business too. I compare them to a casino. The house isn't going to lose, and if
actually, I never thought about that, but it's actually a very good way to look at it.
Yeah, and if the house is losing too much, they're going to kick you out of the casino.
Right. Yeah.
You don't get to go
You're
back.
no
there.
longer
You don't get to go back there anymore.
Right.
So there's an appropriate way to use your insurance, which is for, again, the stuff that is detrimental to the operations, and not necessarily the smaller stuff, or just kind of putting every claim in that you can, so to speak. The other thing too that's happens a lot, which drives up costs, is there's probably about 20% minimum to 40% claim creep on just about every insurance claim, property insurance claims specifically. And that's often due to the view, again, of insurance. Insurance is supposed to be, I had a loss and you get me back to pre-loss condition. Well, insurance has become, in some instances, viewed as a financial windfall. So it's like, I had this claim, how big can I make the claim, and how can I profit from this claim? And so there's opportunistic individuals in that circle, in the form of some contractors, some public adjusters, et cetera, which will focus on the max payout versus the pre-loss condition. And what ends up happening is that comes back to not only the owner who may be experiencing that claim, but also in a holistic picture.
And there's a lot of those.
A lot.
Yeah. I mean, as you're explaining the whole thing, like, I was in my head, I was like, specific people started coming into my head that, and it does happen. Like when we were in the third party management game, having, people would have a legit claim, and it always would become, well, this happened too. No, that did not happen, sir. Like, and at the time, like, luckily, like, it's like, well, I am not telling them that has happened. Like, I'm not going to tell them that because it was broken to begin with. Like, or whatever the situation was. It is interesting. I'm like, to hear you say it is, I know it exists, but to hear you say it just gives me a funny feeling, because it's just like, it is so prevalent. Because I think people do look at it as, oh, great, that we can get an insurance claim, or we have an insurance claim. There's damage, or there's something happening, and it's like, let's see how much money we can get out of it. When in reality, it's like, you don't want the claim to be as big as you can possibly make it. Because people think money's free. We talk about this. There's a thing in hotels called key money. I think it exists in most franchise businesses, where they'll give you key money. The franchisor gives you money when you open a hotel with them. People get very excited. Get very excited, because they're like, it's free money. It isn't free. It's a interest-free loan that you're paying off over the course of your contract. And the flip side of that is you're paying higher fees monthly. And if you didn't take the key money, you pay lower fees on a monthly basis. So the reality is, much like insurance, they're going to recoup the money. It is not free. Yeah. So same with, I mean.
Yeah, and it gets to a point to where it's unsustainable at some point, at some level, if not managed properly. And what could be a win for you in the short term could be a massive loss for you in the long term, because once you get out of that place to where, you're unprofitable to an insurance company, none of them want you.
Right.
And in the current market, where you don't have a lot of options for the hotel owners, that results in a pretty steep increase.
Yeah. In defense of our industry, I would say it's 50% of the assets in the sector, I would say, are just managed badly, and they haven't managed the programs correctly. And then the other 50% are dealing with the fact that the other 50% are not doing the right things.
You're exactly right.
So it's like, and then they don't have nowhere to go. Another thing that we see a lot is person A has a buddy that's a insurance agent.
Mm-hmm.
And we actually just had this happen earlier or last year. We had a sale that we were doing, and we got contacted by an insurance agent for the buyer. Well, he was like a person, like he like sold auto and home property insurance. And I kept asking him all these questions, and he's like, "Sir, I don't know what you're talking about." I was like, "I don't know that you're qualified to sell this insurance." And he was very offended. And I don't even know what ended up happening to that guy. Don't think we ever talked to him again. But how often do you see that where you end up with like a commercial property where like they have a guy, but it's like the guy's not qualified?
Very often. And here's the dynamic of it is insurance has been so commoditized by, the save 15% in 15 minutes. And it's just been really, at the home and auto level, the most basic level, it's just been stripped down to basically just a pricing mechanism. And then you have these big names, Farmers, Allstate, State Farm, whoever. And so there's a lot of brand trust in that name. And so what ends up happening is, these ownership groups say State Farm agent, but then there's still a lot that goes into the knowledge of the product and everything that goes along with it to make sure that you're selling them the right product, structuring it properly, et cetera. And so a lot of people just don't really, unless they specialize in it, don't really have the level of knowledge that they need in order to be able to write it effectively and often, write it at a good price point.
Yeah.
So we see that all the time.
How often do they actually end up binding those policies, and then do they end up binding them and then come back like a year later, like crying?
Yeah.
They show up saying, I need help.
We'll see that from time to time.
Yeah.
And the other thing too is, there's been, I think you alluded to it earlier on in the conversation. There's been a lot of changes, Fannie Mae and Freddie Mac guidelines, which have put a lot of pressure as it relates to the terms that are being offered being acceptable from a, liability standpoint and what's being offered by the insurance companies. And so if you don't have knowledge of that, and people look at a liability limit, 1 million, 2 million's pretty much the standard.
Yeah.
They don't look at any of the exclusions. They just see the limit and say, well, I got a million. Well, a million over here is not the same as a million over here.
Right.
It's very dependent on the endorsements and exclusions that are behind that million. And so if the agent doesn't know to look for them, then you can find yourself in a situation where you buy a policy, it goes to the lender says it's not compliant, go back to the agent says I can't offer it, and now you're working backwards.
Right.
So there's a lot of scenarios that can occur just around the changes in lending requirements and things of that nature.
It's interesting you say that, because I've personally come across this with clients over the years where they have gotten, the broker they're using has gotten them what they feel like is a great deal. And it does meet the requirements of the bank, and it meets the requirement of the franchise. But then say like a tornado will happen or something happens and they find, or like there's a wildfire and they find out, like the wildfire example, like half the hotel burns down in a wildfire. Well, they think they have insurance. Well, one of the exclusions was fire. Like it's not covered. Or, in the case of a tornado, like the exterior of your building has been excluded from the policy.
Right.
And then the brokers, in some cases, don't even mention to the client that that's how they got that savings. My sister told me this once. She's like, because we were in a conversation about a lender, and she's like, you have to understand they're checking off a list that they get. Mm-hmm. Unless there's a problem, they never really go actually pull the information and really look at it until there's a red flag or something to go actually see, what's going on. I feel like that happens sometimes too, where maybe something should be included, like the fire situation, like it should be covered. And the bank requires it, but nobody noticed it at the bank either. Is there something that the average person, when they're renewing their policies or they're getting ready to bind insurance before they give the go ahead and sign, is there something that you would recommend for them to do which I feel like your answer to me is going to be they should read it themselves. But I do feel like, especially on the commercial side, the brokers are very reluctant to give the owner the policy.
Well, they should always have the policy.
And they like will give you a proposal on a separate deck or something, and then they'll just send you the accord forms to sign, to bind, and like, so then it's a question of like who actually sees the policy. And unless you ask for it specifically, sometimes you just don't see it.
Yeah, they should have the policy 100% of the time. And if they're with a direct carrier, again, like a Travelers or Farmers, they usually have it because it's usually sent to them.
Right.
If they're more in the excess surplus line space, then it takes the broker 30 to 60 days to get it from the carrier, but then it needs to go right to the insured. And I think that, as part of the renewal process, I mean, take the agent and the broker out of it and just look from the ownership group. Any changes to your operations in the last 12 months need to be communicated to your insurance broker as part of or before your renewal process, so that can be taken into consideration. It's also wise to provide them with a copy of your lender requirements. Maybe they've changed, maybe they haven't. One thing that always changes is the business income always seems to go up. So if you don't address that on the front end, then you give them what they had last year, and then you get a notice that says you need another 400,000, and then of course then you have to revise it, which is fine. It's not a big deal, but it's just there's a proactive approach to it because you have expertise in it and you know what you're doing. So that, like myself, I can ask for this and look for this type of stuff up front. And I've got all of these other examples, not just one example, of all these other commercial property owners that I'm working with, which through the volume, you can see the trends and you can see the different things that are coming to the market in terms of exclusions or increases, et cetera. And you can be ahead of those so that, the process, we're managing all the back end frustrations so that your renewal process can be as streamlined as possible, versus the other side of the coin, take that out of it and you're just working with, a generalist, let's say. And, it's the result's only going to be as good as, kind of what you put into it, so to speak. And if you don't put anything into it, then, chances are it's going to be status quo.
A lot of people wait too late too. I feel like people get in a situation where insurance is renewing in like 2 weeks, and then they're kind of at the carrier's mercy in a sense, I would assume. Like,
there's a couple of parts to it. Like on the insurance side, we try to start things depending on the size of the account as early as 120 days ahead of time. But often it could, on average, let's just say 90 or 60, but it's not important to the owner until it's important to the owner.
When they get the notice that your insurance policy is going to expire.
or they're 2 weeks out. And the problem with that is the more time that we have to negotiate as brokers, the better result that you get. Right. And so if I've got 90 days to negotiate and work all my levers with all these different carriers and have all these conversations,
you can get creative.
I can get creative and I can get you a better result. But if I'm asking for information for 3 months and you give it to me 2 weeks before, after you got your renewal, and it's going up 20, 30%, now my window of opportunity our window, I should say, is quite a bit less.
Yeah. Which I think goes back to your point earlier, where on the personal insurance side, it's a commodity essentially. And like people are used to being able to do it self-service, where you just go in and change everything yourself and it recalculates.
Yeah.
Whereas it doesn't necessarily, I'm assuming there is a tool you use that's somewhat like that, but in order for you to negotiate, you've got to have time.
Yeah. So in your world, in the hospitality world, it's at the higher levels of complexity. Mm-hmm. So there isn't what you're referring to as like a comparative rater, where I'm going to put in one set of data and they're going to shoot out all these rates to all these carriers. I'm going to pick that one, which is probably how a lot of ownership groups maybe think that the process might be working on our end, which it's not. Right? Like there's a lot that goes into it, and we're not just talking to one underwriter. We might be talking to 10, and if you have other lines of business,
you're talking to them like it's an actual conversation.
Oh yeah. Yeah. Data, conversation. We're telling a story effectively. Mm-hmm. So the better that we're able to tell the story to them, the better result that we're going to get. Well, our story needs to be based on information that we're getting from you. So if we're not getting that information,
Right.
our stories is only as good as the information that we have. And underwriters, they're document hawks. So they have to be able to justify why they gave this extra 15%. Because if there's a claim, they get called on it.
Right.
And then their file gets checked. And if they don't have everything buttoned up, well, then they've got a problem.
Right.
So that's a whole dynamic that, typically an ownership group wouldn't think of. Even a lot of agents don't think about it. I mean, it's one of the things I teach all the time is like, look, you're telling a story.
Right.
The better story.
It's all about the story.
Yeah. The better story you're able to tell.
Even getting lending for a hotel, it's the story.
Yeah.
It happens. It's so frustrating across the board sometimes between like people trying to get loans, insurance, all these different things that we have to do. And it comes down to the quality of the story you're selling.
Mm-hmm.
You might have a really good story to sell and you're just not selling it right. Or maybe it's not as shiny as it could be, but we could shine it up. We can still be truthful, but
Right.
not make it as like bad as it seems.
Right.
Because again, there could be a one-off situation where something happened that if you have all the information.
Yeah. And again, that's, going back to our relationship conversation earlier, there's a big relationship component in the insurance world with our underwriters as well.
Right.
So, the relationship that I have with an underwriter or with a market can get things done that another person that doesn't have as strong a relationship with that market maybe can't.
Right.
Right. So there's a big relationship, there's a big trust aspect that's into it. And there's a big, there's a big story component.
Yeah. So one last thing I want to ask you, because this is what happens. I see this happen so many times. Somebody says, I don't like my insurance rates. And so they decide, they're like, well, I want you to go to your guy and shop it. And what they don't understand, and that I would like to explain to my audience, is you can go to 3 different brokers. They're all calling the same people. And guess what? The other person you went to is going to find out that you already shopped it.
Yeah, you're exactly right. So what happens is you end up working against yourself, so you're like 3 brokers, more carriers, more options. No, they all, for the most part, have access to the same set of carriers. And so you should base your broker of record or agent of record off of trust, not price. Because if you trust that broker, they have, especially again, if you're talking about the E&S markets, they have access to all the same carriers, right? The only differentiating factor, and this is the one thing that, that makes Avalon very special for our retail insurance brokerage. And the question that if I had a relationship and someone approached me that maybe I'd entertain is, do you have anything proprietary or exclusive? Like you can only access, like Arcstone, which is our retail brokerage, our silver bullet is Avalon because you can't get it anywhere else.
Right.
So I can go to other ownership groups and they're like, what do you have that my guy doesn't? And I'm like, well, we have Avalon, he can't access it. But outside of something exclusive like that, the brokers typically have access to the same markets, assuming that they have a specialization in it, right? So you also have to have the knowledge,
Right.
right? You can have the access, but you don't know that you have the access or know where to go.
Yeah.
That doesn't do you any good either. So I think that if you're a sophisticated ownership group, or really, I guess it applies to any ownership group, like focus on the person that has the expertise and that you trust and allow him to shop the market. And then you could ask him, like, have you approached everyone you need to? Yes. Okay. Once that's done, if you felt the need to ask a second person, then you could do that. They'll have a subset of markets to work with.
Right.
Because the other thing too that becomes painful in the whole process is if you go to a bunch of brokers at the same time, he might have the best carrier over here. You have the best carrier over here. You have the best carrier over here. You end up artificially inflating your insurance costs because you didn't get the best of the best all in one place, because you're operating from the point of like, I'm going to go to all these people and,
Right.
it actually ends up working against you, especially if you have to layer the program.
And I always laugh when they sign the broker of record change letters, and then they're very confused. They're like, but I want the first, then they'll want to go back to the first guy and it's like, well, you've already asked to change. Like, you changed. Like now we got to do this
and
whole
then it's a
process again.
to get it
Like,
back. And honestly, if you're the broker on the other side, and this happens all the time too, like
it's very frustrating. I can imagine.
yeah, I mean, I just had one of our agents was working on a very sizable deal, and of course the price was significantly less, and then he went back to whoever he went to, and they saw it, and they're like, "Oh yeah, just sign this letter, no big deal." So then they sign it, then it takes all the work that agent has done, spent the last 2-3 months on, and just gives it to this other broker. And there's not a lot of transparency in the sign the letter. It's just kind of a lot of times this nonchalant thing. But now that happens, now the broker that did all the work has got 5 days to fight to get it back, which just, again, creates all this conflict.
Yeah. And they have other things they could be doing in that 5 minutes.
And it impacts the ownership group too.
Yeah.
So there's just a lot of dynamics. So long story short, as I had said earlier, like
it's relationships.
Yeah, relationships and expertise.
Right.
And base it off of that, and if you're going to trust your broker. And then outside of him, once his submission's done and dusted, if you feel the need to get a second opinion, then do it. But don't sign a broker record letter taking away all of the work that the other person did, because you're gonna end up just in a mess.
Yeah, and it hurts the relationship at the end of the day.
Yeah, it does. It's like, all right, we don't want to work with you.
Yeah, because now you don't look serious.
Yeah,
you're just gonna run off to the next guy. So, well, Dan, thank you so much for joining me today. This is incredible. Sure. If anybody wants to get in touch with you, how do we find you? Or how do we find Garzella Group?
Yeah, if you go to garzellagroup.com, and then we've got, if you go to our brands, it'll list the companies, and there's a contact us, and you can call the number. You send an email to dan@garzellagroup.com. It's probably the easiest way to get a hold of me. And then I can answer any questions or facilitate whatever needs to be facilitated to one of our other companies.
Perfect. And he does respond to every email.
Yes. So there you go.
Fantastic. So awesome. Thank you, Dan. And thank you, everybody. And we will see you next week. Check In with Bryan is a production of RH Media Productions, executive produced by Tyler Alexander. The views and opinions expressed in this episode are those of the host and guests and do not necessarily reflect the positions of Reliance Hospitality Global Limited Co., its affiliates, or subsidiaries. All content is provided for informational and entertainment purposes only and should not be construed as professional, legal, financial, or investment advice. Always consult a qualified professional before making decisions regarding your business.